Greetings. This is Tony Novak here to share a few points on saving taxes and staying out of tax trouble. Today's topic is a little bit away from that usual path, and the topic is CPA letters, which is often related to or connected to taxes, but actually an entirely different subject. And fair warning, this episode is going to be longer, and I'll probably be wandering around longer because it is a complex and a difficult topic for small businesses. So CPA letters, often in the course of business, somebody wants a letter from a small business's CPA for some purpose or another. What kind of purposes? Well, in let's say a lender's world, they would love to have a letter from a CPA that says your business is totally up to date on all taxes and all required filings and all licenses are up to date, and the business has tons of cash in the bank and plenty of cash flow to meet its obligations, so this loan is perfectly safe. That would be a great opinion to get in a CPA letter for a lender. Unfortunately, it ain't going to happen. Those kinds of letters are not able to be issued not only by CPAs, but any ethical accountant could not issue that type of letter. What we can do falls into two categories. One is called attestation, which is subject to CPA professional rules, and the other is a non-attestation letter. And we're going to talk about each of those just briefly. So the attestation, you've probably heard about some audits, reviews, compilations, mostly financial statements, also increasingly what they call agreed upon procedures. In other words, the CPA is going to look at and issue a letter about the number of widgets you have in your warehouse or whatever it happens to be. Right now, lately, environmental issues and compliance, diversity in the workforce, those types of issues are often the subject of attestation by CPAs. But those are not typically used by small businesses for one really simple reason. They're incredibly expensive. It's a simple letter. How expensive could it be? Well, we have to follow AICPA procedures exactly to produce sometimes a one paragraph attestation letter for agreed upon procedure. A short one-page letter might take several days, and once a letter is issued, I have to hire a peer reviewer to go over it and go through that process, which can sometimes go on for weeks. So it is let's just say it's a pain in the neck for a small business CPA to do that. What we would rather do is, most times what clients can afford, is non-attest letters. The trick or the question is, will the person asking the letter be satisfied with the non-attest letter? And how do we make sure we draw the distinction between the two? So I'll say that one simple way to tell the difference is a non-attest letter often says very plainly in the letter, this is not, the information has not been audited or reviewed, and the CPA is not offering any opinion. Let's give the simplest example of a non-attest letter. A letter would be written on the CPA's letterhead, which by itself gives some level of assurance. It would be addressed to the client, not to a third party, not to the bank. It would be addressed to the client and say, Mr. Client, this letter is to confirm that I have filed your last 3 federal and state income tax returns, and as of April 15th last year, we authorized the payment of X dollars in tax liability to satisfy the amount that was filed on those tax returns. What the letter will not say is that that's all the tax you could possibly owe. We couldn't possibly know that. It won't say anything about the solvency or financial stability of the letter, but we can verify straightforward facts. Today, I worked on one where it was a startup business, a new business. So what the heck are you going to verify there? There's been no filings, and the person asking for the letter wants to just make sure that everything's on the up and up. And if there's no tax filings, what wouldn't it be great if you could have a CPA say there are no taxes due? Well, again, we can't do that. What we can say is that we've read this document, business formation document, business name registration. In this case, it was a Philadelphia business, so Philadelphia business registration, Philadelphia Department of Revenue account set up that we're able to verify that online. And we've read the certificates provided by the client, and as we're not, and we can provide a negative assurance there in a general way, and that is to say, I'm not aware of any other business filings. And in that case, we talked about the disqualification, the fact that we're not attesting. I did add a line to the letter saying there's a new entity, so we would not expect to see any tax filings, and therefore I did not consider any tax filings. And in that kind of letter, we're simply verifying the facts. It's a normal letter to a client. And in many, many cases, I'm finding that a third party, whatever that third party is, a government, a potential partner, whatever, is able to accept that. Let me cover one other point before wrapping this up. In the cases where particularly a lender, and particularly non-bank lenders, I'm just going to call them shyster lenders, they want specific wording and specific language in an assurance letter, and CPAs just cannot do that. And you'll hear most of us, when we hear a case like that, where that request, we will just run away from that. That's a bad situation. If someone's telling you they need the CPA to write these exact words, that's not how it works. And that's usually a sign of a disreputable party on the other side. So this is a topic that is often discussed and often misconstrued, and often the subject of putting general concepts and the my words here versus the technical guidance, and that would give us something to talk about. But if you want to talk one-on-one about this type of issue, I'm available to do that. Find me online at taxproblems.cpa website. Otherwise, I'll be back tomorrow.